So we'll hear more from MCLAREN CEO Mike FLEWITT in just a little bit as he talks about his so-called black swan strategy. But first, let's switch gears and check in with Ivan Vatchkov of Algebris Asia and find out what he is buying. So the developments out there, it's a peculiar environment. Some call it a new wonderland of sorts, a significant negative environment in terms of bond yields in Europe. And you've got the suggestion of rates normalization in the US. What are you what kind of assets are you looking at now?
Well, it's very unusual because when you have negative rates, people have to question what money actually is. And that certainly is leading to, I think, a lot of soul searching. The way we're approaching this is that people don't usually give a lot of credibility to European politicians when they do something. We have an internal joke that a European politician is someone who, when they see light at the end of the tunnel, they just order more tunnel. As a result, their credibility is probably less of that than the US and perhaps Japan. And people are not taking the ECB fully at their word. But there's a very...
Germany selling off 5-year notes for the first time at a negative rate. What does that really tell you?
So I think the bond market is ahead of general sentiment, and our approach to this is anything that has yield in the Eurozone area will probably do very, very well. It can be bank bonds, it can be dividend yielding equities, it can even be the banks themselves who are just coming off a very long deleveraging process and they're just stepping up dividend payouts. So I think there's quite a few things that people haven't fully reflected in their thinking, and that's what we're looking at.
Are you saying that ECB's QE is not priced into the markets?
Not across all assets. I'll give you an example. There are these new COCOs that the banks have been issuing, and the volumes are huge and they're accelerating. It's probably one of the credit markets that's showing the highest growth in terms of volume. Most of credit assets these days are in negative supply. And those bonds are still pricing spreads of 400, 500 over benchmark, which is considerably above pre-crisis levels, whereas the rest of the credit market is trading either at negative yields or at very, very tight spreads. So there are segments of the market where I think the message hasn't been fully received. Those are the ones we're looking at.
Do you feel the same way, that the ECB QE is not priced in? If so, how would you make money off of the currency markets?
Well, I think it is priced in currency markets. They're always very much ahead of themselves. And it was getting priced in the beginning of the year, and that's actually why the euro-dollar relationship dropped from about 120 down to 111, 112. And what's going to happen from now on, currencies will be affected by what happened in the other assets, what's going to happen in the other asset classes.
It's more
but
the
actual
spillover effects that you need to be mindful
it's already gone through the currency market as such. It's been priced in, and we're now just waiting for the next thing. And of course, with what's happening with Greece at the moment, God knows what the next thing is.
Yeah, we did have a deal, but we were all sort of scratching our heads to whether it's a deal or not. In this chase for yield, how come Asia is not really feeling some of that love?
I think it's very, very regional specific. And let's be serious, this is mostly about the bond market at present. The message hasn't been fully received in equities yet. Most bond markets are regional, so Europe will be initially dominated by people trying to adjust their domestic portfolios, which represent the bulk of their investments, and only then will they probably look outside. And when you look at the liquid bond markets in Asia, you're not left with a lot of choice necessarily outside of Japan and potentially Australia, where again QE or rate cuts have already repriced a big part of the curve. At the same time, I think people have to take the decision initially how to allocate out of the things that are already negatively yielding, and they tend to sort of look closest to them at first. So I think eventually Asia will benefit.
Which
but there
ones?
Well, our sense is it'll be some of the Southeast Asian markets which are still showing decent yield and decent economic growth, because Korea, Japan, Australia, even China are not going to be, I suspect, at the forefront of investor thinking when they start allocating out of their domestic markets.
Right. So you just talked about Southeast Asia. So when will that catch up really happen? Is it when the rates normalization actually kicks in later this year?
You could argue it's already in process. I mean, India's currency didn't sell off on a rate cut, and Indian bonds have actually been doing quite well. Even that market isn't fully necessarily accessible to foreign investors. So I think that's a good example of things already starting to happen. When you look at yields across Southeast Asia, they've compressed. So I think to the extent that people are considering moving money out of Europe and the US, that's slowly happening. I think the US rate hike, if it happens, will just confuse people rather than accelerate the process of allocating outside of the US. In fact, it'll probably do the opposite.